Hi traders, welcome to another edition of Weekly Forex Forecast on FSLess, which is for 1st to 5th of June 2020. In this week, I'm going to share with you guys the list of currency pairs I am watching out for next week, should in case of trade breakout opportunity. If today is your first time viewing my YouTube channel, you are welcome. And then do not forget to like, share, put a comment down, hit the subscribe button as well. Click on the notification bell so whenever I release educational content of this kind, you're gonna be the first to be notified. Remember, forex trading is an high risk investment as well and high reward investment. So do not trade with the money you cannot afford to lose. Here are the list of currency pairs I am watching out for next week. I have the euro against the USD against the Canadian dollar, I have the USD against the switch, I have the euro against the switch, I have the Australian dollar against the Japanese yen, and then we're going to wrap up things with the gold. The first currency pairs on our watch list is the euro pairs against the USD. I discussed about these currency pairs in my last weekly forex forecast, and I pointed out right the potentials which lies on these currency pairs. I said I can figure out no probability of trade opportunity coming next. That was the last spent week on these currency pairs right here. And then this support key level structure right here actually rejected price, whereby on the 4-hour chart price carved a bullish pin bar on this key level structure. And then we can see how the price action signal which formed on the daily chart right here, which was the doji, and the price action signal which formed on the 4-hour chart was the bullish pin bar. We can see this medium right there. It was a state of consolidation whereby price was fluctuating through a rectangular box right here. You can see the movement right here, and then this price action signal actually made price to break out of this zone. So I'm going to show you guys the 4-hour chart of this currency pair. And here's the 4-hour chart of the euro against the USD. We can see right here, what is it? A key level structure which has been rejecting price. We can see, I'm going to zoom in on this chart. Okay, zoom in on this chart right now. You guys can be able to see that properly. You can see right here, we have a resistance which always reject price. You can see that. That died. So what happened next? After price broke this key level structure for the first time. Remember, the rules do not take the first breakout. We waited, that was a retest, that was a pullback of price downward. And then what happened next? Price made another reversal upward, whereby price broke this region and the price carved a potential bullish engulfing bar. This was what actually contributed to this massive rally upward right there. And this is what we called retest strategy. After price broke this key level structure which is at 1.09892. So let's check back on the daily chart to see what we have to look out for next week. So next week, for the fact this zone right above this region, we have to trace back to historical record on our chart and see how this key level structure had been so much active. And here is it. You can see at this zone right here, it was a rejection for the left shoulder of this head and shoulder right here. You can see rejection right here, and then again right here, and then right here. So this is a very strong key level structure. We need to pay a very close attention to next week. We have to pay close attention right here next week. For the fact price failed to close above this key level structure last week Friday, and then there was a retracement of this candle right here, whereby this candle actually resulted into a bearish pin bar. I wouldn't be surprised next week if the bears comes in to make rotation downward to retest the key level structure which was broken, and then take note, this key level structure which acts right here can actually serve as a factor whereby the bulls can actually get in right there and then make a rotation of price to the upward rally. So here's a very strong key level structure we need to watch out for as well next week, for the fact that I've been rejecting price at this key level structure 1.09892. So it's a very strong key level structure we have to pay close attention to. If the bulls failed to defend this zone, then I wouldn't be surprised if the price of the euro against the USD drastically depreciate downward to the next key level structure which acts at 1.07782. But take note, the bears have to clear off this minor level right there before they can actually re-expose the next key level structure which at this zone right there. And if the bulls comes in next week aggressively, whereby they pull up price or maybe they defend this zone right here, or maybe they defend this zone right here, whichever of the way, defend price and then ensure a daily close above this key level structure right there, which acts at the 1.11502. Then it simply shows that the push are not giving up and they are still willing to pull up price to retest the next key level structure, which acts at 1.13323. But take note, there is a swing which the bulls have to clear off this zone right here, and then the bulls have to clear off this zone before they can pull up price to retest the next key level structure right here. So next week I am looking out for what the bulls and the bears have to get done at this key level structure 1.11502 and the 1.09892. Also take note on the monthly chart, because this was the last candle which formed on the May 2020, and this is the last candle of the month. So let's check the monthly chart. Here on the monthly chart we can see it was a bullish rejection bar of candle formation in the month of May. And if I zoom in on my chart right now, you can see this currency have been fluctuating in a symmetrical triangle. You can see the swing low right here, you can see right here, right here, right here. So this currency pair is actually approaching the apex of this symmetrical triangle, and then we all know in a symmetrical triangle price can either break to the upside or to the downside. So if the bulls gradually pull up price to break out of this symmetrical triangle, then it actually means this may be another upward rally movement, which may last years for the currency of the euro against the USD. And if the bears successfully ensure a monthly close below the symmetrical triangle whereby they pull a retest and the bulls fail to defend this, whereby pull price backwards into the channel, then I wouldn't be surprised if the price of the euro against the USD drastically depreciate downward, and then this may be a multi-year rally downward. So I am looking on this currency pairs on the daily chart to see what the bulls and the bears have to get done at this key level structure right here and here next week. Next on our list is the USD against the Canadian dollar, and then we can see how this rally has been in a bearish channel downward, and then you can see our dynamic support trend line, which had an extension from this swing low of December 2019 right here to this zone right here. And I'm gonna show you guys how this currency had been bouncing through this medium right here. You can see right from this peak right here downward right here, price had been bouncing right here. We can see how price broke this key level support right here, which had been rejecting price upward rally upward right there. So I'm gonna zoom in so we guys can figure out this chart properly, and then you guys can figure out a series of low swings right here. We have a low high, low high, low high, low high, low high, and then which actually give an indication signal of what? Of weakness in the bullish rally. Price actually broke out of this minor key level right here. There's a key level support right there. And then we can see after price broke out of this key level support, minor key level support right here, price again went through what? Through this major key level support, which acts at 1.37936. And the price actually retested this key level structure right here. That was on multiple 2 times. And then there are some traders who thought right here, actually maybe they didn't figure out there was an extension of dynamic trend line which extended from these low swings right here up right here. You can see the low swings right here. There's a low swing right here, low swing right here, low swing right here. So this was the dynamic support trend line which served as an hindrance for this trend to make a rally downward right there. So I am not interested to short the USD against the Canadian dollar right here, for the fact I have a lot of obstructions, a lot of obstacles on the way for the USD to move freely in a downward trend. Point number 1, I have an extension of this my dynamic support trend line of my bearish channel, which may act as a support for this downward trend coming downward right here. And then number 2, you can see this our dynamic support here right here, which can as well, which is actually rejecting price now, whereby the Friday candle failed to penetrate downward in a bearish mode trend. And then again right here, I'm gonna point out another factor right here. We can see we have another key level, minor key level right here. Actually I represented it with a blue line, which means it's a minor key level for us to watch out for. can see that is a 1.36670. If you have been following me, you will notice why I always use a blue line for some of my key levels on my chart. It means a key level which have been broken so many times, but which has a little probability to reject price or to serve as an entrance for free flow of price on the chart in a bearish trend. So next week, if price eventually make a rotation of price downward, whereby price breaks downward below this dynamic trend line right here, then price may have a difficulty to break through right here. And if price break through right here, there's still a key level structure which acts as 1.3562, which the bears have to clear off. And at this zone right here, we have our dynamic support of our bearish channel. And then at this zone right here, may eventually reject price upward. And then price may have a difficulty to break upward again at this level right here, whereby we have a dynamic trend line again, which may act as a dynamic resistance right there. And alternatively, if the bulls successfully make a rotation of price upward right here, then this zone has high tendency to attract the buyers, because there is a confluence factors and intersection of key level structure right here and then the dynamic support trend line right here, which can actually attract the buyers to be willing to pull up price to retest the dynamic trend line of this bearish channel. So I'm gonna pay a close attention right here next week to see what the bulls have to get done right here, or maybe the bears are actually gonna be successful to pull price downward to ensure a daily close below the trend line of the intersection of the key level structure right here. Next on our list is the USD against the switch. I discussed about this currency pairs in my last weekly forex forecast, and I said I am favoring a bearish downward movement for the fact I can figure out a lot of bearish interest, bearish prayer on the higher time frame. That is a monthly chart. Here's a monthly chart. You can figure out a lot of bearish prayer right there. You can see that it's a very strong bearish interest. You can see retracement of all these candles right here. All these consecutive 5 months, it was a bearish prayer. And then again, I'm going to show you something right on the weekly chart. Likewise, on the weekly chart, we can figure out as well all the bearish trend prayer right here. So now let's navigate on the daily chart so we can figure out what is happening. And then on the daily chart, we can figure out a symmetrical triangle. And then we all know in a symmetrical triangle, price can either break to the upside or to the downward side. In a bearish trend, in a symmetrical triangle, price have high tendency to break to the downward side. So price had broken downward right now out of this symmetrical triangle right now, and then we are having a potential key level support right there, which may actually give the bears a difficult time to penetrate price downward to the next key level structure, which acts at the 0.94981. So what are we looking out for as a trader right now? So let's view out. Maybe we already have a retest. Remember, in the first breakout, don't take the first breakout. Institutional traders do love to trade against the first breakout, whereby they usually result into what is called fading the breakout. So here is the 4 hour of this chart. After price broke out of this 4 hour chart, well, it was a decisive volume. You can see that on the 4 hour chart with a shaving bottom, although I haven't seen a well-defined retest of this broken dynamic support now to act as a new dynamic resistance. So there is a fact, this is the reason whereby I am still not interested to short this currency pairs, not only if I can see a decent the retest of this our broken dynamic trend line now acting as a new dynamic resistance trend line, whereby price can make a rotation upward. Then we can figure out maybe a bearish pin bar or a bearish price action signal. Alternatively, if the bulls fail to make a retest of this dynamic trend line and then the bear successfully pull price downward, then I'll be only be interested to see if price can break this zone. Maybe look out for a retest right here at the key level structure right here before I can short this currency downward here. Alternatively, if the bull steps in next week whereby they defend this zone right here, take note, this is a key level structure whereby the bulls can come in next week and then defend this zone. We can figure out right here how this zone will be rejecting price. You can see that rejecting price, and then we can figure out a swing high right here. We can figure out a lot of rejection bars right there. So next week I wouldn't be surprised if the bulls comes in aggressively to defend this zone, whereby they make a rotation of price backward into this symmetrical triangle, whereby this will actually lead to what is called a fake breakout to the downward side. So next week I am still favoring a bearish more downward trend for the USD against the switch. But I have to figure out a well-defined retest and then a well-defined bearish signal before I can actually go short on this currency pairs. For the fact this level structure right here is a key level structure we have to put into consideration for our bearish interest. Next on our list is the euro paired against the switch, and then we can figure out right here, if you're familiar with technical analysis, this was a downward trend rally. And then what happened next? Here is it. Price actually was made in a series of a low swings, low high, lower low, low high, lower low, and then low high, and then a low. We can figure out right here, price failed to carve a new swing lower low, like we did have right here at this zone, a lower low right here, lower low right here, a lower low right here. You can see price failed to carve a lower low at this zone right here, which is a signal of weakness in a bearish momentum. And then again right here we can see at the swings top right here we have a low high, low high, low high, low high, low high, and then at this zone right here momentum changed right here at this zone whereby price carved what a new swing high. Consider. So I'm gonna show you guys right here on this chart. You can see the movement, downward movement, downward, right? You see that? And the price what change in momentum, which goes above these swings low right here. Take note, we have a dynamic resistance which act at this zone right here, our trend line right here. And I'm gonna zoom in on this chart so you can figure out. Can see we had a dynamic resistance trend line which had been in extension right from these swings right here downward right here. This dynamic resistance actually rejected price at this zone right here, and then at this zone right here, and then now it has high probability to reject price at this zone right here. And then take note of this our key level structure which acts at this zone right here, key level structure right here, and a key level structure right here. So I'm gonna zoom in now on this currency pairs. Let's zoom in. So zooming in on the currency pairs right now, we can see how price was being rejected by this our dynamic resistance trend line right here, whereby price carved what a potential bearish pin bar. And then right here we can figure out what a key level structure which was being broken right here. We can see how price was being rejected at this zone right here. Price was being rejected at this zone, and the price made a reversal of trend, breaking out at this zone right here. You can see how the swing low was being broken right there. Price made a retest right there. Price made a retest, reversal upward. So what am I looking out for next week? For the fact this is a potential dynamic trend line which had been an extension right from these swings of this currency pairs from this region right here. I'm gonna show you. There's a swing right here, swing right here. Now there's another swing right here, and then this point medium right here is an extension right from 9th of April 2019, and then again right here November 2019, and here comes another retest again in 2020. So for the fact this currency pair had been in a downward trend, and there's something I want to point out right here so you guys can see. I have another dynamic support trend line right here. You can figure out right here. So what I have right here is a bearish narrow wedge, and then we all know in a bearish narrow wedge, price have high tendency to do what? To break out in a bullish direction, like we did have right here in a narrow wedge right here. Price broke out. So what I'm expecting right here now is if price can make a rotation out of this zone right here, we have to look out for a retest whereby this our dynamic resistance trend line should act as a new dynamic support trend line for this upward movement of price. But take note, the next key level resistance act at the level of 1.08 0.0814, which can act as a rejection zone for the bullish rally of the euro against the Swiss. And then the next dynamic resistance trend line comes in at the intersect of the 1.08410 right here. Alternatively, if the bulls fail to make a price rotation upward right here, we can see price already carved a potential bearish pin bar. The bear is gonna make a rotation downward right here, and then the bulls have to step in at this zone right here to defend this key level structure, which acts at the 1.06317. Failure for the bulls to defend this key level structure right here, then I wouldn't be surprised if the price of the euro against the Swiss drastically depreciate in value to the next key level, swing low, which acts at the 1.05765. And then if the bear successfully make a rotation down whereby the bulls fail to defend this zone, then I wouldn't be surprised if the price of the euro drastically depreciate again in value to the next key level support, which act at the 1.05044. And then I want to show you guys something on the weekly chart. You can see on the weekly chart the pattern, it's very clear. It's a narrow wedge, and then already on the weekly chart we can see price already broke out right here. So what I'm looking at for next week, to see a retest right here for this key level to revalidate this breakout right here, where I look out for the bullish price action at this zone to go for a bullish rally. But this is gonna be on a bullish term trend trade opportunity right there. And then on the monthly chart, let's figure out what's happening on the monthly chart. On the monthly chart, May actually carved a bullish engulfing bar, which engulfed the total candle, which formed right from this zone right here. You can see how the bullish engulfing bar engulfs all this candle formation right here. The first candle right here, 1, 2, 3. So the month of May engulfed all the total 3 months. That was a month of April. That was a month of April, March, and then February. So May totally engulfed all these 3 months. So it was a bullish engulfing month. So next week on the daily chart, I am looking out for what the bulls and the bears have to get done at this zone. Maybe the bulls are gonna defend this zone, whereby this zone is gonna act as a new support key level, or maybe the bears are gonna ensure a daily close below this key level structure, whereby they're gonna retest the next swing low right there and then eventually make the price downward to this key level structure right there. Or maybe the bulls are gonna defend the zone and then pull price to break out of this dynamic resistance trend line right here. So I am watching out this currency pairs next week. Next on our list is the Australian dollar paired against the Japanese yen. We can see right here this currency pair had been in a bullish rally right. You can see our price keep on carving a series of high low, high highs right here, same level of high right here, and now a new rallied high upward. You can see this bullish rally right here. So what am I looking out for on this currency pairs? I have to look up to the overall trend of this currency pairs, and then I'm gonna zoom in. So let's check on the weekly chart. You can see on the weekly chart this currency pair had been in a massive bearish rally from this swing high right here. We have a retest right here, series of a swing low high. We have the low high right here, and then this region was right from September of 2014 to this swings right here now. So from this region right here, this is a long-term bearish trend. Therefore, for the fact this trend had been in a bearish long-term trend, and then I can figure out on the daily chart a rising narrow wedge, which technically has an implication of a bearish interest. So how wouldn't we be interested to long this currency pairs right here? And then again, for the fact right, if you are zooming, you can see we have a potential key level structure which act at this level right here. That is a key level structure of 72.407/71.833. So this zone next week can actually act as a resistance zone for this upward rally right here. So what am I looking out for on this currency pairs? So I am looking at this currency pairs at this zone for price to carve a new swing low high right there, like we did have at this zone right here, whereby we have a dynamic support trend line right there at the dynamic resistance trend line right here, and then you guys can see the implication right here where price keeps on fluctuating through this medium, and then what happened? Price made a downward trend rally right here. So let's take the measurement of this downward rally from this zone right here to this zone right here. It was a massive 1,427 good pips. So with the same trading idea right here, I'm looking now to go on the bearish side right here. If I can figure out what a bearish strong price action signal right here for me to go short. And then you have to take note, a key level support acts as a 69.905, and this zone can serve as an hindrance for the bears to pull price downward. And the boost comes in at this zone to defend price at this zone, then it means this level is trying to revalidate another strong key level structure, which actually rejected price at this zone right here. And then we had a breakout right here, a breakout gap right here, and then a key level, resistance right here, resistance right here. We had another rejection right here. And then again, we have to take note, if the bears fails to break below right here, then it means the bulls are willing to pull up price to retest again this key level structure will act at 72.407 for the second time, and then which may lead to the upward movement rally of this currency pair to retest the next key level structure, which act at 74.451. Alternatively, if the bear successfully make a rotation and then ensure a daily close below this key level structure, which act at 69.905, then this can open the door for a more aggressive bearish rally from this zone right here to the next key level structure, which acts at 64.759, and which may eventually open the door for the next key level structure, which acts at 62.379. And then I wouldn't be surprised if the price of the Australian dollar against the Japanese yen drastically depreciate in value down to the swing low of this currency pairs in the month of March 2020. You can see how the action actually occurred from this region right here to downward low swings right here. So I am watching out this currency pairs next week to figure out trade opportunity on this currency pair. Last on our list is the XAU against the USD or the gold. I have been longing the gold right from the medium whereby this inverse head and shoulder was being broken. I'm gonna zoom in so you guys can figure this out. You can see we had an inverse head and shoulder right here. We have shoulders right here, the head right here. After price broke this neckline, I have been after price made a bullish rally and then price made a retest right here of this key level structure, I have been longing the gold. And then I added to my position that was on Thursday. I actually announced this to the VIP members right here. I added to my long position again. And then right now, due to the fact of what is happening around the world in the financial market due to the coronavirus pandemic issue, I figure out gold technically to be a point of interest for investors, and they fundamentally gold have high probability to move more in a bullish aggressive rally. So in my last weekly forex forecast as well, I discussed about the gold, which I stated I am in anticipation for a more bullish rally on the gold. So here is the daily chart. I'm gonna zoom in on the daily chart so we guys can figure out the whole trend of the gold. We can see the gold had been in a very bullish aggressive rally. You can see from this swing low right here, you can see the series of high swings, low swings, low swings, low, high swings, low right here, swings high. So gold had never for once be a market which we never appreciate in a very reliable value. And then again, I'm gonna zoom in on the monthly chart so we can see the overall trend. On the overall trend now on the gold, you can see right from this swings low right here, you can see that was on right from 1999. That is a price level of 277.90. I'm sure that, let's check that. That is this level right here, 248.64 value of the gold, right from where that was on 1999. Gold had been in a bullish aggressive rally. You see that right here, bullish aggressive rally upward. And then again, if you guys know are familiar with technical analysis, you can figure out right here on this bullish rally, what do we have again? We have we had a bullish flag in a bullish upward rally. You can see that price broke out of this bullish flag right here. You can see that price broke out right here, and then price retested again right here, whereby we have a rectangular medium right here. I'm going to represent this with a rectangular medium right here. We have the resistance right here. We have this right here. Price broke out, and then you can see how gold had been in a very aggressive rally since then. So I am in anticipation of more bullish rally for the gold, and then the next level acts at this zone right here. You can see gold is actually approaching that level. So let's figure out that price level on our chart. That is the level of the 1794.36. So I wouldn't be surprised if the price of gold hits this price value, and then again we have the next key level resistance, which acts as 1826.07, and then again the final highest swings high of the gold in its historical record is the price value right here, and then that is a 1918.80. So I wouldn't be surprised if price of gold appreciate drastically in value to hit this swings high right here. That's a key level structure of 1792.44, and then goes above again to the key level structure of 1826.07, and then hit the highest swings in historical record of 1918. So if you view properly this chart, definitely gold is trying to carve what? A double top formation. So I'm going to show you guys a double top formation. This is the first top right here, a downward rally right here, and then what? A double top right here, whereby we have the north neckline right here. So this is the formation I can figure out on the gold, on which the gold is trying to carve. And then let's view on the daily chart. Nothing is impossible. Let's view the daily chart. Here's the daily chart, and then what can you figure out again, guys? A bullish rising channel in a bullish trend. You can see that. I'm gonna zoom out so you guys can figure out, right? You can see that. Here is the chart right here. You can see a bullish rising channel in a bullish upward rally. You can see that. So gold has high tendency, high probability to break upside in a more aggressive bullish rally. Well, nothing is impossible in the financial market. If the bulls fails to close above this key level structure, which acts as 1746.95, and then the bear comes in to make rotation downward, then there is a dynamic support trend line which acts right here, and a key level which acts right here, that is it, 1702.80. If these levels right here fails to reject price again in an upward rally, whereby the price of gold eventually ensure a daily close below this key structure right here, this can re-expose go to the next key level, which acts at this zone right here. And then if the bulls failed to reject price above this level right there, then gold can eventually make the rotation downward to the next key level structure, which acts as 1642.52. A failure at this zone for the bulls to reverse trend downward, then price of gold can depreciate in value to the 1551.77. Well, I am still anticipating for a bullish more rally right there, but gold have to clear off this key level resistance zone, which had been rejecting price right from April of 2020. You can see how this zone keeps on rejecting price. So the constant retest of this key level structure right here, it is a sign of indication there is high possibility of breakout to the to the upward side of this trend. So I am still favoring a bullish rally on the gold. And then guys, that is all I have for you in this weekly forex forecast. And then make sure you keep up to fundamental factors which can actually cause volatility in the market next week. Next week we have a lot of interest rate, especially we have the Australian interest rate on Tuesday. We have the GDP as well on Tuesday. We have the ULZ non-farm employment change. We have the interest rate, Canadian interest rate, overnight rate. We have the ISM, USD. We have the euro interest monetary policy statement as well, interest rates. We have an employment change for the USD. Make sure you keep up the fundamental factors that can cause volatility in the market. So that, okay guys, that's all I have for you in this week forex forecast. And do not forget to like, share, and put a comment down so I can know how you feel about this content. There is a free forex trading class at the bottom of this video, and it is an appreciation from me to you for watching this video to the end. Click on that link and get free access to my free forex trading class. In this class, I'm gonna share with you my consistent proven trading strategies, which will not only help you become a profitable trader, but also a consistent and disciplined trader. Maybe you are even looking out for reliable trading signals. There is also a link at the bottom of this video. Click on that link so you can get access to my trading signals. I will not only send you trading signals, but will show you why I am making my trading decision on each trade I send over to you. So that's all guys, and do have a wonderful weekend. Peace.